Hello student, we are in the topic of accounting equation. Let's solve the fourth example sum. Example, show an accounting equation on the basis of the following transactions. First transaction, Suresh started business with cash rupees 1,50,000. Second transaction, opened a bank account by depositing cash rupees 25,000. Third transaction, he sold his personal car and deposited the amount in the firm's bank account rupees 50,000. Fourth transaction, he purchased a building and furniture for rupees 1 lakh. Fifth transaction, he purchased goods from Raju on credit rupees 50,000. Sixth transaction, he paid cartage rupees 500. Seventh transaction, he sold to Giri on credit goods costing 6,000 for rupees 9,000. Eighth transaction, received rent from tenants rupees 1,000. Ninth transaction, received security deposit from tenants rupees 1,500. 10th transaction, purchased stationery for cash rupees 100. 11th transaction, invested in shares for personal use 50,000. 12th transaction, received interest in cash rupees 200. 13th transaction, introduced fresh capital rupees 25,000. And 14th transaction, goods destroyed by fire is rupees 500. Draw up a format like this. Accounting equation. Transaction. Assets. Liabilities. And capital. First transaction, commenced business with cash. Cash asset increases by 1,50,000 and capital also increases by 1,50,000. Second transaction, opened a bank account by depositing cash 25,000. So paid into bank 25,000 deducted from cash, and a new asset called cash at bank is created, 25,000. Third, he sold his personal car and deposited the amount in the firm's bank account. So this is additional capital introduced. 50,000 add to bank and 50,000 add to capital. The fourth transaction, he purchased building and furniture for rupees 1 lakh. So purchase of building and furniture. Building and furniture, asset increases 1 lakh rupees and cash reduces 1 lakh rupees. Fifth transaction, he purchased goods from Raju on credit for rupees 50,000. So credit purchases, stock increases by 50,000 and creditors increases by 50,000. Sixth transaction, he paid cartage, cash reduces by 500 and it's an expense, so capital also reduces by 500. Seventh transaction, he sold to Giri on credit goods costing 6,000 for 9,000. So credit sales, debtors increases by 9,000, stock reduces by 6,000 and 3,000 profit is added to the capital. Receive rent from tenants. So rent received, cash increases by 1,000 and it's an income, so capital also increases by 1,000. Ninth, receive security deposit from tenants 1,500. Add to cash 1,500 and security deposit is a liability. A new liability is created, security deposit of 1,500. The 10th transaction, purchase stationery for cash rupees 100. So purchase of stationery, it's an expense, so 100 deducted from cash and 100 deducted from capital. 11th transaction, invested in shares personal rupees 50,000, that's drawings. Subtract 50,000 from cash and subtract 50,000 from capital. The 12th transaction, received interest in cash. So received interest rupees 200, add 200 to cash and add 200 being an income to capital. 13th, introduced fresh capital. So additional capital 25,000 add to cash and 25,000 add to capital. And last transaction, goods destroyed by fire, loss of stock. We need to deduct from stock. Stock is the fourth item under assets, 500, and it's a loss, so we deduct from capital. Let's find the net effect. Net effect, the cash net is 2,100. For bank it's 75,000. For building and furniture it's 1 lakh. For stock it is 43,500. For debtors it's 9,000. For creditors it's 50,000. Security deposit is 1,500. And capital 1,78,100. Let's check out if the total of the assets is equal to the total of the liabilities plus the capital. The total of the assets is rupees 2,29,600 and the total of the liabilities plus the capital is also rupees 2,29,600. So we've solved the fourth example sum.